Hello, my name's Brad Teal, and together with Prue Bryant, a partner of Brad Teal Real Estate, we thank you for viewing our video. This month, we want to talk about property sales, days on market, stuff that we've talked about before, but in particular a little bit about negative gearing, and I thought we'd discuss with Prue the investment property market and the conditions. So Prue, what is the condition of the current rental market?
Well, Brad, across our 10 office network, rents appear to be either holding steady or declining slightly. This is on trend with industry figures. CoreLogic Melbourne May figures revealed a 0.1% fall last month, while Melbourne saw a very modest 1.7% rise over the last 12 months. The annual change in rental rates continues to be at its slowest pace in the last 2 decades.
Now, what do you think is influencing this trend?
There's many factors that contribute to the slowing rental growth. These include an excess of rental supply in certain areas accompanied by lower rates of population growth, all of which have impacted on the demand for rental accommodation. With record high dwelling approvals and construction activity set to peak in the next 2 years, we anticipate the current rental market conditions will persist. Landlords may not be in a position to lift rents, potentially putting tenants in a stronger position to negotiate.
So Prue, what is the current rental yield that landlords can expect?
Well, Brad, currently the rental yield remains at a low 3%, which lends itself to the current buzzword negative gearing. As low rental yields result in the negative gearing of most investment properties, what is your take on the negative gearing debate?
Okay, well, negative gearing is a really hot topic, particularly in political circles. But in simple terms, negative gearing is where the income from an investment property is lower than the expenditure, and that loss is able to be offset against somebody's income, as you'll see Bob's example on the screen. Negative gearing is such an important foundation of investment property, and it's what has driven so many people to build their own wealth, to become less reliant on government pensions going forward. So when people get to retirement, they can have their own financial independence. So negative gearing is a really hot topic, and I mean, in a simple explanation like I've given now, you probably need a full hour to discuss it and its impacts according to what is going to go forward if one party gets in or the other. But negative gearing for so long has been one of the absolute mainstays of rental properties, and that's why we would, as a company and our employees, would like to see it going forward remain as it is. A quick snapshot of facts and figures influencing the property market, and we thank CoreLogic once again for all of these facts and figures that we use each month. Unemployment, this has remained unchanged at 5.7% last month, with an estimated 10,800 jobs coming online. This has declined from 6% as at the 1st of January 2016. While the value of a homeowner's property has undergone massive rises, the increase in inflation and wages has been comparatively more sedate. The cumulative change in Melbourne's house prices from December 2008 until April 2016 has been 67.8%, according to CoreLogic. Now, for years we've all been told that 10% growth compound will double the price of real estate every 7 years. So over this 8-year period, we've seen properties grow just below 70%. So it's not that 10% compound, but it's still enormous growth. The median number of days on the market for metropolitan Melbourne has been 5 weeks. So 35 days approximately over the last few months, very consistent days on market. Interest rates are at a fresh record low of 1.7%, enormously low. And when you remember back to the heady days of 17.5% in 1990, it really makes you reflect on exactly how low they are now and exactly the influences that slowed the market down on that early part of the 1990s. Back at that time, the average median price of Melbourne prices in property was $131,000, and a loaf of bread was $1.37. The average mortgage was $71,000, and the average wage was approximately $27,000 per annum. So there are lots of changes in the property market and in our lives over that period of time. So I thank Prue for sitting in this month on our market snapshot, and we look forward to seeing you in July around about election time for another market update.